What is up, everybody? Charlene FX, your favorite female trader, and I am back with another beginner series video for you guys here today. Alright, so in continuing this series I have for my beginner traders, we're going to be talking about fibs, okay? And fibs, of course, is short for Fibonacci. Now, when I first started learning how to trade, guys, I swore off of fibs. I could not understand it. I didn't understand, how to place it, where to place it, when to place it, and it was pretty much the death of me, right? But as I began to get better at trading and my knowledge, started to progress, I began adding different things to my strategy to help me, better take higher probability trades and, become profitable. So I'm going to be showing you guys in a very simplistic manner how to use fibs, when to place it, and how to use it as an added confluence to help you better have more confidence in taking your trade setups. Okay, so really quickly, when you're using fibs, guys, you want to focus on market structure. Okay, if you're not familiar with market structure, please go take a look at that video that I have on my channel. All right, so if we're looking at a fib setup here, a market structure setup here, basically what I want you guys to understand is that you basically want to structure your fib around market structure. Okay, market structure is basically the way the market moves, right? Making higher highs and higher lows, or vice versa. So if you're looking at the market moving in a specific direction, in this case being buys, you want to structure your fib from your swing high to your fib swing low for you to be able to predict where you think the market is going to retrace from, so that you can understand where the market is going to potentially go and how you can form your trade idea, basically. All right, so if we're looking at this market structure here, right, we have price making higher highs and higher lows. Obviously we have bullish market structure here. So how you want to place your fib? All right, now 2 points. The best time frames that to use your fib on is basically on your daily and your 4-hour. Doesn't matter what kind of trader you are. Doesn't matter if you're a swing trader, you're an intraday scalper. You always want to use your fibs on the higher time frames, because the market, it's the higher time frame is king, right? So what happens overall, on the higher time frame is pretty much going to set up what you think is going to happen on the lower time frames. All right, but for this video's sake, for beginner's sake, I'm going to keep it simple and keep us on the 15 and the 30-minute time frame. All right, so when you're using fibs, guys, you have something that's called a fib level, or a price reversal level, right? A PRZ zone, price reversal zone. All right, your price reversal zones is understanding where you think price is going to reverse from before it continues up in its natural trend. All right, so when you're placing fibs, you want to place your fibs from your highs to your lows. All right, so you place it, or vice versa, depending on what the trend of the market is. Okay, so if we're looking at fibs, the way I place my fibs on this setup here, you'll see that I place it from my low to my high. Why? Because we're in a bullish market structure. If it was bearish, I would place it obviously from my high to my low. Okay, so if we place it from your low to your high, in this case here, you want to try to understand where you think the market is going to retrace from before it's going to continue in its natural direction. Okay, and this is how, guys, you're going to be able to take your trade positions and understand where to put your stop losses and where to put your take profits as well. All right, so if I'm looking at a bullish market structure here, I'm seeing that price made a high, and now we're retracing to this PRZ zone, which is the 61.8%. Then I can say to myself, okay, if price is pushing bullish, price has stopped at around my 61.8%. I can continue looking for price to potentially come up to either my next high, my next resistance level, or I can place it at a PRZ level, or a fib level, which is -27% is usually your take profit levels. All right, that's the way my fib is set up. That's just the way it goes. All right, really quickly, let me show you guys my fib setup, setup here. This is how my fib is set up. These are the measurements that I use. I keep all my lines black just to keep it, simple, and this is all you need. So record it, take a picture, screenshot, whatever you need to do. All right, so that's how the fib is set up on this on basic market structure here. All right, so if we look at this setup here, and this was a trade I called on AU this morning in my signal group, and I took this trade basically off of fibs, and I'm going to show you guys how. Okay, so one of the things that you guys can do is basically identify market structure, identify your trend, right? Where do you think the market is going? Right, and this trend right here, obviously the market is bearish, right? We're holding up underneath a resistance level. We've tapped it twice, and now we cannot create new highs. We basically tested the last high that we formed up here. So automatically, I'm looking for sells, right? I'm not looking for buys because we obviously have shown that we cannot break above to create new highs. So obviously, I should be looking for the selling positions. Now, let's use our fib levels, right? How do we place fibs? We place our fibs, if we're in a downtrend, we're going to place it from our highs to our lows, all right? And you want to wait for your highs and lows to actually form before you place it. So you have to practice a level of patience when you're using this indicator, because if you don't, you can place it improperly and it can cause you to actually, you know, take a bad position. All right, so we're going to place it from our high to our low, and we're going to try to understand where we think the market is going to retrace from, right? So your golden levels, guys, is always going to be between your 61 and your 50. That is my rule of thumb. It doesn't have to be yours. Everybody has a different type of preference that they use on how they want to use their fib. So if you're gonna have to back test it. You're gonna have to actually practice with it to understand how to properly place it, when to use it, what time frame to use it on, and all that other stuff. But for the most part, guys, your golden levels is going to be between your 50 and your 61% levels. All right, so once price comes to that level, then you can look for price to eventually come down to your next PRZ level, your next level of support, you know, whichever confirmation you want to take, right? So I actually took this trade off of this simple fib, right? How many confirmations did I have? I had maybe, I think, 4 or 5 confirmations on this trade. Okay, so it was a very high probability trade that we were taking here. All I had to do was wait for my actual market structure to play out and give me the rejection levels that I was looking for, and then I went ahead and entered. We actually took entries right at the top of this move here. Once price started coming down, we looked for our sell entries, and we were able to catch that move. Okay, and that was basically off of fibs, right? The trend was bearish. I waited for our highs to be respected. I waited for price to break below. I waited for the retest, threw on my fib levels, placed my stop loss above my resistance levels, and my TP was down at the next level of support. And that's it. All right, and now had we held this move all the way down to this TP here, it's at 110 pip TP. All right, I think I took profit at about 30 pips or so, something like that. But if I would have held this move all the way down, we would have, would have been a better day profit wise. But that's okay. You don't have to worry about that. But that's another thing. If I had placed my fib level at my negative 27%, which is usually your take profit level, that would have also been an excellent setup as well. So you pretty much have to pick your poison to find out where you want to take your profit at, where you want to place your stop loss levels at. But for the most part, guys, when you're using fibs, it's only supposed to be used as an added confluence to help you have, an extra confirmation for you to be able to take a higher probability trade. The more confirmations you have, the more chance you're going to have to actually win your trades and be profitable. Okay, guys, so this is just a beginner's I guess crash course on how to use fibs, how to place your fibs. Practice it, back test it, learn how to place it on your highs and your lows, or your lows and your highs. Try to see where price retraces from, test it out on different time frames to try to get an idea of where you think the market is gonna react from. And then now you have an extra, I guess, tool in your gun belt for you to be able to take great trades. All right, guys, so that is fibs in a nutshell. I hope you guys were able to get a little bit of knowledge out of it. If you obviously want more knowledge, more information, please take a look in the description box. I have a course, I have my Signal group, I have plenty of different resources to help you guys become excellent traders. All right, guys, so thank you guys for watching. Please don't forget to like and subscribe, and I will catch you guys on the next one.